Good morning, guys. Let's see. I already traded pre-market, and again, I've got a cash account here, and I pretty much went through all my cash in the pre-market and came away, with a small profit. But anyway, so I wasn't planning to trade the open today, and I was getting ready to close out Webull, and I noticed NVUS, which went up really, I think in the after hours yesterday compared to the close. So it closed around 37 cents, and then in the after market it went up to $1.12, and then it started selling off. So I wasn't watching it all morning. I traded PSTV, but I was going to close out Webull, and I checked the markets tab and looked at the extended hours screener, and I had this huge gain. So I decided to check it out again, and like I said, I went through all my money already in the pre-market. I had like $5 and change left, so enough to buy 5 shares. And the setup, if the setup is there when the market opens, I'll take a trade just to kind of not so much to make money, but again to kind of, I guess, collect data on my strategy. And if I make a few pennies, I guess that's a little bonus. So anyway, what I'm thinking is that this thing obviously is already overextended at this point, so getting in it now is not a good idea. So I'm going to watch it in the open and see what happens. Definitely not going to get in on the first 1 minute candle. At the earliest, I might take a breakout over the first 1 minute candle. So let's see, it's about it's 9:28, so 2 minutes till market open. So we'll see what happens. If it chops out too much at the open, then I will more than likely switch to the 5 minute chart and wait for a good setup on the 5 minute chart. Generally, I use the 5 minute chart over the 1 minute chart, but if the price action is clean enough on the 1 minute chart, then I'll look at that. So what I'm looking to determine whether it's clean or not is seeing the lows of the candles and seeing if they are consistently higher than the previous candle, short of pullbacks. So like obviously you're going to get these little pullbacks. That's normal. You expect to see that. You want to see that because that could give you an entry. For example, this would have been a good entry here after this pullback. Then you see it break this, or you could have got the break of the high of that candle. So the pullbacks are fine, but when it's doing its little run up, you want to see the low of the green candles consistently moving high. If it's real choppy, then either you need to change to a higher time frame to see if it cleans it up, or just don't trade it because it's too choppy. So at least that's my strategy. So about 10 seconds till the market opens, so we'll see what happens. If I get in, it'll be on a stop limit order, so I'm going to get that preset up. And then this is why you don't buy right before market open and hold, because you never know what's going to happen. So this is the 1 minute candle. I'm going to see how high it goes. It's breaking out through the pre-market highs. If I put any orders in on the 1 minute time frame, I like to do it around the 50-second mark. Otherwise, you really don't know what you're looking at yet. So that was kind of weird. It showed like it popped up. But again, especially on Webull, this is probably much better on paid brokers like Lightspeed. But on Webull, there's so much going on in the very first minute, you can't really trade on it very well. It takes a long time for the orders to fill, and you get like weird things like that where it showed the candle went really high and then all of a sudden the price disappeared. So I don't know what happened. So this could be a 3-bar setup. So high is 113, so I would get in at 114. Give it. So let's see. Looks like we're gonna get in. There we go. Ooh, It's coming back down pretty quick. So I want to give this, actually I don't want to give this that much room. Now I'm going to follow the price action up because this thing is so volatile. There, I already got out. So it was like a 7-cent move. It was like a few seconds. Oh, I don't think it got me out. This should get me out. There we go. All right, so I'm not too sure what happened there. Let's see. Well, it looks like I got out a little bit early. I probably would have got stuck in a halt, which could have been a good thing. But I don't normally record myself trading live, so I have to admit I was a little jittery there. But still came away with a small profit. So yeah, made a little bit money. Missed some of the move, but that happens. Let me see. Let's see. So I bought 4 shares at looks like $1.16. Let's see. I don't really look at these while I'm trading. So I got filled at $1.13. So my order was triggered at $1.14, and then the price came back down a little bit. So I got filled at $1.13, which is better. And see, my stop was at $1.07, and my sell order got filled at $1.21. So what's that? 15 cents. So 15 cents is pretty good, especially in a few seconds like that. You know, I'm happy with 5 or 10 cents on a move. So I'm definitely happy that I took that trade. And you have to be careful with stuff like this because you could be trading on FOMO, you know, like, oh, look at this thing. I wish I was in there. And, you know, I'm not saying I don't feel that at all, but that's not why I traded it. And, you know, maybe when I first started, I would have just felt that FOMO and said, oh, I need to be in on this. Look at everything I'm missing out on. So my idea behind it today was seeing that big run up and you know, just all of this kind of momentum in the pre-market, big volume coming in. What that indicates is strength, that people you know, think that this stock is worth something, at least for today. This is, you know, essentially a penny stock, so it's not like a good long-term investment or anything like that. But for scalping, like what I do, or trading momentum, it's perfect. So once I decided that this thing showed some potential, then I made the commitment that I'm only going to trade it if I see the patterns that I want to see. And that's really important, because if you get in just out of FOMO and you don't really see a good pattern, you know, maybe you see a big sell-off at the open and you're thinking, oh, it's getting cheaper and cheaper, I can buy more shares, let me get in. Not a good idea, because it can just continue down. So I was waiting for setups that I know give me a higher probability of actually making a profit. So essentially all I'm trading right now is 3-4 bar plays, and if I see stocks trending up, then I'll get in on a pullback. So for example, if this happened during the open, or if I was just watching it earlier, I might, like I said earlier, I might have got in over here. These pullbacks aren't super clean to get in on, but just to kind of show you that that's the type of trade that I'm willing to take. So I saw the setup that I wanted and I got in, and it was a little bit choppy. And again, like I said, I was a little bit nervous for sure. I've played some of these stocks at the open lately, and they don't always work out. But this was a stronger setup, so that's why I got in. And I tried to follow it up. I don't know if you saw me grab my stop order. I tried to follow the price up. That way, if it started to flush down, it would stop me out, and I would get a little bit of a profit. Sometimes when you do that, if the price kind of moves down below where you drop your stop market order, Webull just cancels the order, and that's what happened here. The order disappeared. I thought I was out of the trade, but I noticed that I was still in it. I saw the position bubble up here, So I dragged the limit order down and tried to get out that way before the thing flushed down, and it did flush down on the next candle. So and I'm trying to remember, so I had my stop here. I still would have been in on it. I could have stayed in, but again, these plays right at the open and these penny stocks, they're pretty crazy. You really never know what's going to happen. If you catch one that just keeps going up and up and up, you're pretty lucky. And really, my idea behind bringing the stop up is to try to kind of follow that action. But sometimes in doing so, you get stopped out a little bit early. But honestly, I'm okay with that because these are just so unpredictable that I'd rather get stopped out early, leave some money on the table, than end up staying in too long and getting stuck in a stock that's flushing down, or maybe does a halt on the way down. I mean, look at it right now. It's flushing. Big sell-off. That's what I mean by flushing. And it's continuing to do so. So there's some people that bought it up here, bought it up there, and they're probably holding bags right now. So like I said, I'm done trading. I'm just kind of watching this to see what happens because, like I said, you never know with these things. So. There's a little double bottom tail, so that's generally it's a sign of support. So early in the market open, we're 8 minutes in, that sometimes like all bets are off at this time. You use your technical analysis and your candlestick reading, and sometimes it works, sometimes it doesn't. Looks like it's holding true here, but we'll see what happens. So this is kind of like a little downtrend. So if you were going to get in, I would say get in at 123. And if you use the stop limit orders like I did, let's say you put an order in right now at 123, you don't have to worry about it filling you early while this thing's flushing down, and then you have to write it down. If you use the limit order and you put in an order at 123, it would fill you wherever it is, because the limit is telling Webull that I don't want to pay more than 123. I'll pay anything underneath that. So that's pretty dangerous, and it's something really, to be honest with you, in the very beginning I didn't understand. So that's why I'm sharing that. So I'm just still recording just because this is interesting to watch what's happening with this stock. The more you look at charts and the more you watch stocks play out, the better you understand how price action works and how the buyers and sellers behave on different types of stocks and different times of the day. So a couple minutes ago I said put in a stop limit at 123, so you would have got filled here, and of course you got to have your stop loss. I would put it right below these bottoming tails, and it looks like you've got a good chance of getting stopped out. It only really went up 2 cents, so not really a good profit there. Yeah, you get stopped out. So that's the danger playing these stocks at open. They move really fast and they whip around. I don't. I mean, obviously I said if you were going to get in there. I mean, that might be a trade I would have taken. Depends on how aggressive you want to be, and maybe with like a small share size so that you're not risking a lot. But I definitely would have had my stop loss there, because this isn't a super well-defined pattern. You're seeing, an uptrend here and then a slight pullback there, slightly lower than, say, like 50% of this range. Well, it looks like it still may go up, but let me see. Normally I put my stop 2 cents below the low of the previous candle, or in this case, these are all the same. So let's see, the low is 116. So I would have been at 114. Let's see where this went to. 115. So I'd still be in it at this point. And right now the price is consolidating. So traditionally, or I guess technically, whenever there's an uptrend into consolidation, you expect another uptrend or a breakout. But, that's the pattern that you expect. I guess that's statistically what's more likely to happen, but there's no guarantee. So I would still have my stop loss at 114 and be willing to take it if I got stopped out, even seeing this consolidation. Once I set my stop loss, I don't move it. I don't move it lower. I would only move it up. So I'm just watching and obviously talking through this thing because I'm learning from it, and maybe you guys will too. I know this is long. There's a lot of dead air, but this is kind of cool what's happening. Let me just see if this is at the top. So this thing was at the top of the extended hours ranking, 180% roughly price increase. It's now the most active stock being traded, with 34 million shares being traded. It's probably the top gainer as well. It's the top gainer. So, and you see the whole market is trending up, and most people are in here trading NVUS. So that's the stock to trade today, based on the screener at least. Just going to go back and see what's happening now. So this is a good time to tell you that I usually use my laptop to go from the trade screen back to markets or my screener, because of what you just saw there, how long it takes for the page to reload. Going from stock to stock, the page loads pretty fast, but to go to any of these tabs here and then come back to trading, it really takes a long time. So it's good to have another computer, laptop, or your phone to check the markets or screener. So like I said earlier, my stop would have been at 114, so I'd still be in this. And let's see, and I said I would have gotten in at 123. And this thing, is still so choppy. Like I might move my stop up to 124 at this point just because the choppiness of it. But yeah, that wouldn't have been a good idea. Well, actually, see, these things are crazy. These penny stocks, and at the market open, it's just really wild. I would have gotten stopped out there probably for, depending on how many shares, I might have, scraped a few pennies. But these things are crazy. But you really got to be careful, and you have to take your stop. There I said I would have moved my stop up, so I would have taken it there. I would have been out of the trade at this point. But this thing could flush way down. We don't know. It might bounce back up. It could flush down. These things are really unpredictable. I mean, this is just not really clean at all. If I would have came to the stock at this point, say I wouldn't have traded any of this, and I'm seeing it right here, even with that 180% gain. There's nothing here that makes me want to get into this stock at this point. I'd have to see the price action clean up quite a bit. I would probably switch to the 5-minute chart. And yeah, so this is like a telltale sign of choppiness. You might consider it consolidation, but these candles are just too rangy, is the term that a lot of people use. There's too much range. So this is like 15, 18 cents, And on a dollar stock, that's, this is like roughly 15% move right here. It's pretty huge. So I'd be looking for much, much smaller candles before I would consider getting into this thing. If these things got smaller and kind of continued sideways, since you have this big, huge green bar here, you could assume that there's a good chance that there's going to be another green bar that'll pop up here. So we still have the indicators in our favor. The VWAP is right here. It's just now kind of, it's gotten below it a little bit. So anyway, this is going to be a long video, but there was some fun kind of analysis on this chart and a trade that I wasn't really planning on getting into, but was willing to do so if I saw what I needed to get into the trade. So I'm glad I did, because it was a nice little experiment, and I stuck to my plan and made a small profit. So if I would have been trading this on the 5-minute chart, I don't think I would have gotten in, because like I said, I'm looking for 3-4 bar play setups at the open, because there's no trend to identify yet. So if I had an order in right now, it would be at 134 to catch the breakout, but I don't think I would do that, because these candles are just too big here. If this one being big is good, but I would rather see these candles smaller, because I would put my stop loss below the lowest candle, and that's just too big of a range. That's 20 cents. So times how many ever shares you're buying in at. So anyway, I hope this was helpful. It was interesting to me. I might watch it back just for my own education. If you have any questions or comments, leave them below. Thanks for watching.